Hey traders, welcome to Charts and Coffee. Hope everyone's having a good morning. It's the day after the Federal Reserve, and we're seeing just exactly what a 50 basis point cut can look like, and then the outlook for a whole lot more. Right now, we have expectedly, actually, let's go over here. Bear with me. Sorry, gang. I'm actually chewing up my last bit of supplements. The show crept up on me. All right, let's do this here. All right, I want to show you all. Here we go. There we go. The CME Fed Watch tool. So let's take a look at this. Oh, there I am. Let's take a look at this. And this is what we've got on the CME Fed Watch tool. All right, supplements are down the hatch. Chased by some coffee. All right, here we go. So what do we have here this morning? Expectations are that we're going to continue to see cuts going into the end of the year, at least two more. So 66% expectation on the November 7, and then you can see here things start to get a little shaky because there's still some expectation for, not a lot, but there's still some expectation that now that we've gone from that half point cut and what we're expecting, anything more than a quarter is probably overdoing it. But you can see here, there are some traders that are thinking we might see more than 2 quarter point cuts. This is where it's going to get pretty screwy for the rest of the year. But here's what we can hang our hat on. We will continue to see lower rates. And are we going to continue to see cuts into each meeting going into next year, as far reaching as June? And that is, yes, that's the expectation, which kind of brings me back to a really simple thing that oftentimes traders don't believe, and I don't know why, which is rate cuts are not bearish, right? Now, there's all sorts of rate cuts. There's emergency rate cuts. There are rate cuts along the lines of just kind of normalizing policy. I would say this is the latter. But the bottom line is every bit of evidence throughout the year has just hammered home. And you know what? Let me say this too, because there's going to be a lot of traders. And let me just kind of squash, because we all have it, the pig in the head. There's a pig in the head that this morning is likely going to say, we didn't get a dip. Oh my gosh, we've broken out. I missed a move. Look, this is the year right here. What I'm sad to say is a lot of traders missed the year. The first 3 quarters of 2024 have been overall very, very bullish. And so unless you're one of those traders expecting some kind of crash and thinking September seasonals override the reality of what we're getting, which is what we've been trying to talk about for months and months and months. Don't let seasonals be confused as setups. Tendencies are not trades. The only 2 drama windows in the year, funny enough, this one was pretty much triggered by the lone dissenting FOMC member. It was a unanimous vote, almost. Bowman wanted to go with a quarter point cut. Everyone else wanted to go. So she was a lone dissenter. And she was also the cause of most of this melee, where at this point in time, her bright idea was rate hikes. Again, I'm sure she has her reasons and whatever, but that was the first window of crazy volatility. The second, of course, was the carry unwind and the, 5 standard deviation move and the dollar yen. Notice how no one's talking about the dollar yen anymore, because it wasn't just the yen strength that was so troubling. It was the US dollar weakness that accompanied the non-farm payroll miss. So remember, it wasn't just one big yen move. It was the yen move versus the dollar, which was exacerbated days and days after the second rate hike from the Bank of Japan. So these little details matter. These little details matter a lot. Overall, though, gang, this has been an overall uptrend. We're going to continue to trade it as that. Hopefully, you all been watching the recaps that I've been sharing. And I don't mean recaps about what I think about the market. I'm talking about what we're doing in the mastery. How are we trading? There are exactly one put trade in this whole mess. And I even thought, wow, there's a nice downtrend in energy. It's correcting, mean reversion. Let's go ahead and take advantage of it. And serves me right, because we have been bullish all year. I've been bullish in August. I was bullish in September. There is no reason to expect that some shoe is going to drop. And remember, it's a revenge trade. If you're not already long, if you're not already bullish, if you haven't been bullish for 9 months, look, I'm not telling you to buy at the higher highs, but start to align to what the overall direction is. There's still a quarter left of the year. This has been a very, very good account growth year. And that's what I'm trying to get across in Charts and Coffee. It might sound Pollyanna, right? Oh, the markets are moving higher. And then there's going to be all these arguments, but what about this? And what about that? And what about that? Well, if we're punching up to higher highs, gang, that's bullish. Abandon that nonsense. It's not going to help you. All these folks worrying about the special kinds of hedges they had to put on yesterday because maybe they were caught flat-footed. Retail traders are their own worst enemy. And that's really been, as I'm getting to the end of the third quarter, that's what's probably the saddest and most frustrating part of watching other traders trying to navigate through the market. Retail traders are their own worst enemy. It's not algos. It's not market makers. It's not the hedge funds. It's none of those things, right? If we can just say things are bullish and I'll wait for a dip. I'll look at the calendar so I'm not stepping in front of a major event and unneeded volatility. Am I going to buy immediately in front of the Federal Reserve? No, the only thing that I did buy, and the thing that we do have long, was the XLI. I've been slowly winding down, not winding up at highs, the positions. So as of yesterday, we closed our staples position, and let's see, we did not trade the QQ. In fact, we had no day trades yesterday. We're still in XLI. We're still in Johnson & Johnson. We're still in financials, right? Now, would I like to have more long positions? Well, time will tell, because yes, we've got through the Federal Reserve, but we still have some interesting volatility windows. The volatility windows would be options expiration tomorrow. So when you look at the calendar, you think about, when can I hop on a dip buying opportunity potentially? The calendar is going to be your best friend. Find out when those events are. Know the volatility could be there. Be really cautious about FOMC days, because again, if you're looking at the Dow or the S&P and the NASDAQ and are thinking, oh, I missed a big move. Gang, there have been big moves for months. So if this one candle is not one you're unengaged, you're not engaged in this one, don't worry about it. All right, we've been getting them all year long. So don't kick yourself. It's one candle within a very, very bullish year. So that's where ultimately we want to remember that the overall movement in the S&P, the NASDAQ, and the Dow, the Russell even, these are going to carry with them the stocks and the sectors within them. So, a lot of folks ask, Rog, what sectors are you looking at? The heavily weighted ones in the indices, right? If you've watched this show for any period of time, the last week or two even, you know what those are. This is what we focus on in the Sector Secrets Mastery. What are the heavily weighted sectors? And if you think yourself, Rog, you've got some exposure mainly to the Dow and the S&P via financials and industrials. Absolutely, because I really haven't liked the way the NASDAQ has been moving. It's been a laggard compared to the other two. Remember, the SPX hit an all-time high this week. All right, so I've been committed more to the Dow and the S&P. Maybe the NASDAQ starts to look a little bit more interesting. We continue to watch primarily consumer discretionary. I know a quirky sector, but this is probably one of the stronger looks within the NAS. So stick with where we talk about the sector normalized performance. I share that with you here in the room from time to time. Stick with where the strength is, and there's still a lot of strength in gold. We've been talking about things like gold miners and gold, GDX, Newmont Mining, I would keep an eye on those as well. So we've gotten past the FOMC. We're going into tomorrow's OPEX event. Tomorrow, OPEX is about open interest, right? That's really what it's about. It's about open interest. And ultimately, the overall movement tomorrow is going to be like a bubble, right? Friday's options expiration, and then going into end of quarter at the end of this month, there's still some major, you can look at it from the standpoint of options expiration is an open interest game. End of month is going to be a game of money managers stopping and saying, wow, is my book bullish enough? Am I in the things that are moving? As I'm going into the last quarter of the year, and I'll be presenting year-end results in just 3 months to my clients to justify why they're keeping money with me, is my portfolio looking like something that reflects what's happening in the market now? Right? If there was a lot of concern that September was bearish, that's been, I mean, I know there's still another week or so left, but that's been just absolutely wrong. And if you were to back out the noise of the dumb money rollover of those traders that had such a terrible trade in that carry that they had to sell stocks to raise capital, back that out. And this has actually been a pretty nice ascent in the S&P since, I mean, back this garbage out here, right? This was that beginning of, and this has been a pretty decent ascent since May, so I hope that everyone's starting to find ways to block out the noise, for crying out loud, turn the television off, and just look at what you see and then find those relative performers. And yeah, I wake up to a morning like this, and I think this is what we've been talking about all year. This has been a great account growth year. And if you're struggling to see that, think, Rog, easy for you to say, I'm not in the mastery. No problem. You've been joining me here at Charts and Coffee. This has been something we've been talking about for a while. But if you need a little bit more walkthrough, Rog, can I see some specific trades? Can I see what it is you've been doing? Where did you get in? What kind of risk? What kind of cost? Where did you get out? Kind of information. I get it. And that's why, and again, 3 quarters in, and we're just now embarking on what will be a prolonged rate cutting cycle from the Federal Reserve. It ain't over, gang. So if you're thinking, Rog, I missed this, is there still more to come? I certainly do believe so, if you know where to look and you know how to manage risk and profit. So next Tuesday, we're going to have a webinar, and I'm going to walk you through what we did in August. In August, we beat the S&P with our trades. We didn't trade a single tech name. We focus on defensives. Why? Because that's where the relative outperformance was. As we go into September, I wasn't concerned about whether or not I can pick a bottom in a magnificent 7 stock. We stuck with strength. We stuck with gold. We stuck with Coke. We stuck with, again, where the trends were. IBM. That was not something that I thought that would be one of the monster trades for us in September. And then lo and behold, I think this was almost a 4 times premium paid. This was actually one of the grand slams, and I'm not a home run hitter, but this was definitely one of the grand slams of September. And we're only about 19 days in, right? So I'm going to walk you through setups like that so you can see, oh, train your eyes, right? This is what you're looking at. And this is not going to be a list of stocks. They're not meme stocks. They're not penny stocks. I don't play that game, but they are major stocks that just don't get regular rotation on television or in typical trader conversations because they're not Mag 7 names, right? They're not the favorites. And I think trading the favorites, sticking with, oh, my favorite is NVIDIA, or worse, sadly, when I see questions about SMCI and things like that, those are opportunity costs. Look at NVIDIA. Why on earth would I look at this, right? This is where traders get trapped. And then they're trying to put on great trades with great indicators in a place that doesn't have the probability for follow through, right? And that's where a lot of traders are still struggling. Okay, hopefully we're going to fix that on next Tuesday, 8 p.m. And I'm also going to show you some of the things, finally, because I've been talking about this for a while. I'm going to show you some of the results from 6 months of SPX testing. And if you want to know, Rog, what was your SPX testing about? Can SPX testing be done with long calls, long puts? By the way, check. Can SPX testing be done for smaller accounts? Check. And what is the kind of frequency and expectation around the SPX testing that you're doing? I'll talk about that a little bit on Tuesday as well as all the other trades that we put on in the mastery, all of which I've been sharing with you all here. Like we're not picking out a couple winners here. I'm showing you everything that we've done so far in September, right? Because that's the only thing that tells you what it is that I'm thinking and doing. Rog, it's long calls, yep, and still a lot of emphasis on financials, healthcare, staples, utilities, and gold. That hasn't changed yet. That hasn't changed a whole heck of a lot yet. And again, I've got the XLF, Johnson & Johnson, and XLI position going into today. All right, so let's tackle some questions. And please, gang, remember, if you find yourself in a group of traders that are all agreeing about a single topic, you probably want to do something very different, because the consensus in trading, the 80%, the 90%, are usually set up to be wrong. We know this, right? So question that broader conversation. If everyone's going into September bearish and everyone thinks the Fed is late and they're awful at their job and whatever else, because now we should be thinking really bearishly rather than just a pullback, which is frankly what I was really hoping for. If I could have had a wish list, blown out the birthday candle kind of thing, I would have loved a pullback. A little bit of a pullback, a retracement, not a crash. I would have loved that. But when you find yourself listening to folks that are talking about that and only that, that's probably the last thing that's going to happen. And that's the way the markets tend to behave. It's not being a contrarian. It's the truth that the things that surprise us can't be the things we see coming, because then it's not a surprise. So when I was saying earlier, everyone's thinking, oh, we're going to crash because of recession or fill in the blank. That can't be the reason, right? Because that means we've already in some way braced for it. Okay, first question this morning. So as we go into end of quarter, by the way, I'll just be looking at another volatility event, and I would look for more of what we saw the other day. I know we talked about this in the mastery. I can't remember where else we had talked about it, but the most interesting thing in front of the Federal Reserve, most interesting thing of this week thus far, was on Tuesday, the surge we saw in the laggards from this month. The laggards of this month are largely energy stocks, semiconductors, and metals and mining. Not that they're leading the charge higher, but they're finally participating to the upside. That's a big deal. That is not a sign of risk aversion. I think I talked about this in a free video on Tuesday. The fact that the laggards of September were rallying in front of the Fed was very interesting. Again, you don't need fancy analysis to figure out what the big money is doing. Just look at where we might be seeing some sector rotation. And that chart that I share with you here, gang, this comes from Koyfin. I love this service. Koyfin. It's the normalized performance. It's a free service. They have a couple really cool premium upgrade, but this is their free service, and it's amazing. And we use this on the regular in the Sector Secrets Mastery. Okay, so what else do we have here? XLC and Google, Jody. So this is where XLC is a tricky name. XLC has not been one of the relative performers, right? It's doing all right. XLC's strength is really IYZ, and this goes back to what we kind of at this point tongue in cheek call the sector secret. What is weighted within a sector? What is weighted within an index at this? And when you look at the individual names that are outperforming within communications, it's not Google and it's not really even Meta. The outperformance, the rising tide in this group is really the telecommunications overlap. It's telephone, it's Verizon, it's been up until recently T-Mobile. Netflix has been doing okay, but I don't want to really do much with Netflix. Buying at a high, expecting a surge up above 700, probably not such a great idea. But in general, it's been telecommunications. Meta's definitely trying, but Google's a mess, and I would leave Google alone. EA is a mess, which has been pretty darn good for most of the year. I'd leave EA alone, and Charter is a mess. I'd leave Charter alone. But take a look at the structure here. Where are the green candles? Where's the green trend? So in order, telephone, Verizon, it's a toss-up between Netflix and Meta, but we always want to wait for that pullback opportunity. Netflix is such a great example of this, right? Momentum traders are going to get all excited about some kind of surge on, say, the 13th or the 17th. And if you get into a surge early enough, like on the 11th, when it dips into the daily price movement range and moves higher, you've got a good trade. Chasing it up here on the 16th or the 17th, that's just, and then take a look at what happened yesterday. That's not what I would want to see on a day that I'm buying it up. But yesterday, moving into the daily price movement range when really nobody wants it. Oh my gosh, Netflix is moving down. Heaven forbid we buy a dip. That kind of thinking is actually going to hurt traders, especially in a trend. All right. I don't have a link to the webinar yet. I should really soon. I'll have one for you all by the end of this week. What's today? Thursday? Gosh. Yeah, somebody should be getting me a link by tomorrow. So I'll definitely check on that. Yeah, thank you, Dave. I'll check on that. I don't know why I don't have a link yet. I am not in control of such things, but I will make sure I get y'all the link. All right, last question. GD to the long side after a dip. I'd keep an eye on it. Yes. Kurt, yeah, I would. That's not a bad looking name at all. All right, gang, be good to each other. Keep your eye on the trends. Focus on those, and should have it by tomorrow. All right, the big boss is telling me should have it by tomorrow. I better have it tomorrow. All right, be good to each other, gang. I'll talk with you soon.